Money, 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 your weekly personal finance date with me, Surabhi Upadhyay. It's tax filing season once again. Now this year, the Central Board of Direct Taxes has introduced new ITR forms which incorporate several key changes. So if you have not filed your income tax return so far and are perhaps confused about how to begin, where to begin, worry not, because help is here. Today I have with me Mayur Shah of EY as well as Akhil Chandna of Grand Thornton to demystify all the steps that you need to follow to ensure that your ITR is filed well before the 31st of July deadline. Gentlemen, thank you very much for being with us on the show. So it's always slightly confusing. The conundrum is always there, and most of us end up waiting till the last week or so. So let's get the initial things out of the way first of all. Akhil, I'll open with you. This year the forms themselves underwent some changes, but are these marquee changes or only sort of minor cosmetics here and there?
Surabhi, well, the ITR forms have seen a lot of changes this year, specifically from a disclosure requirement perspective, whether it's for a salaried class or for the people who are covered in the presumptive taxation scheme, the investors in dealing with shares of unlisted company. And the government has come out with a lot of details from a GST perspective, especially for the people who are filing ITR 3 and ITR 4 for individuals who have income from business or profession. However, we must acknowledge the fact that CBDT has done a great job by notifying the new ITR forms well before the commencement of the tax filing season, that is in the month of April itself. This reflects their commitment to give best of the services to the taxpayers. But as you said, the forms has seen a lot of changes in all the ITRs.
Okay, fair enough. Mr. Shah, opening thoughts. What have you made of all the changes? I mean, ITR 1 being the most important one for most of the salaried individuals.
Yeah, so if I look at it, government is looking to automize everything, and therefore the changes which are being made is in order to implement automation as far as written processing is concerned. So so this year they have been asking for more and more details. If we are looking at ITR 1 details, it is covering only income from house property and income from salary. In that situation, if you see the salary which is being exempt, like house rent allowance, which is exempt if employee is paying rent to a landlord. Similarly, conveyance allowance or any other such allowances which are there, which are being exempt from tax. Sure. Now we are required to submit even details in relation to that, how it has been calculated, what is the amount.
Yeah. So actually, I want to go all through all of these changes step by step. So let's do one thing. Let's take it form by form. I mean, there are 3 or 4 key ITRs that most individuals like you and me end up using and filing. So let's begin from the beginning, which is ITR 1, the Sahaj form. Now, this is a simple one-page form that we are talking about. It covers, I think, the salaried class, largely speaking. Sure. But this year, non-resident Indians have been forbidden from using this form, right? It is only for resident Indian salary taxpayers.
That is correct. And for them, they have to use either ITR 2 or ITR 3.
The non-resident.
Non-resident.
Right.
And only resident person can use the search form. And especially the persons who are having income below 50 lakhs. Okay. And those people only can use search form, which is ITR 1.
Okay. So once again, just to recap, first of all, the applicability of this form. Who can use ITR 1? As long as you're a resident of India and you're a salary taxpayer, and your income does not exceed 50 lakhs. That's an important threshold to keep in mind. Akhil, let me bring you in on this. There are certain other limitations to ITR 1 as well, right? I believe if you, for instance, if you have capital gains, if you've sold off a house in a year or you've sold off shares in a year, then this is not the form that you can use, because capital gains as a disclosure is not made in ITR 1. Am I right?
Yeah, you're right, because they have, as Mr. Shah said, that only for salaried employees and people with one house property and income from other sources, and who has a threshold limit of less than 50 lakh rupees can only file ITR 1. So if the people have capital gain tax from any transactions, so they have to either opt for ITR 2 or for that matter ITR 3, depending upon their income from sources.
Okay, so keep that in mind in case you have capital gains and this is not the form for you. You have to look at Form 2 or Form 3 or the other forms. But if you don't have capital gains, then you can look at this. Of course, interest income, the interest that you're earning on your fixed deposits, etc., that can be taken on board in this form. One more clarification, as Akhil also mentioned, as long as you have income from one house property, a single house property, you can use ITR 1. Absolutely. If you have two houses, more than one house property, again, this is not the form for you. But let me understand what the taxman means when you're saying income from one house property. Does it mean that this is a house you necessarily reside in? Or could it be that you yourself are staying on rent, yet you're generating income from this house, which might be put on rent itself?
So your question is either it is self-occupied or let out. It really doesn't matter.
Okay.
So far as you have one house property. The other important aspect is that if a person is earning dividend income more than 10 lakhs, in that situation also ITR 1 cannot be used.
Oh, so if you're a high dividend earner, you have lots of investments in shares and your dividend income is exceeding 10 lakh rupees in a year,
then this cannot be used.
Yeah, so ITR 1 really not for the lucky rich folks. Let's just put it simply. Now let's come down to the changes, gentlemen. The changes that ITR 1 itself has seen this year. And Akhil elaborated on some of the points that were discussed earlier, because it seems now there are many granular disclosures required with respect to your salary as well. Details like HRA, other things like conveyance, etc. So what are these additional disclosures and where in the form do they need to be made?
So, in ITR 1, as you rightly said, that this year there's a salary breakup details which is required to be provided and furnished by the taxpayer. So, as we work and we have a Form 16, if you've seen the Form 16, there are a lot of taxable allowances, perquisite, value, profit in lieu of salary deduction under Section 16. So earlier there used to be only income under the head salary which needs to be reported in ITR 1, but this year the government has come out with the changes of asking for each and every detail, so that the purpose is to reconcile the details furnished by the employer and what employees are furnishing in their ITR. Similarly, in house property as well, this year they've come out with a breakup of gross rent, local taxes paid, deductions, and interest on housing loan. So these kind of issues has been these kind of disclosure requirement has been asked by the government this year. And the other changes which government has come out, which are common, I think maybe in all the ITRs, is a verification of tax return. So earlier there was not required to mention in whose capacity the tax return is filed and whether the taxpayer is competent to furnish the tax return in that capacity. So that's one of the changes in the verification of tax return. This year the cash deposit requirement which was there in last financial year because of demonetization has been taken away, because now it's not relevant for the current tax year. So these are the few changes which are very, very relevant from ITR 1 perspective.
Okay, so fair enough, several important changes. The good thing is, of course, that one disclosure requirement that has been done away with, as Akhil explained, is the details of the cash that you were depositing in your bank accounts that was required to be furnished during the demonetization era, but not this year. But Mr. Shah, just coming back to the additional disclosures with respect to house property, if you can just tell us the details there. Because I believe that, for instance, if you are earning rent above 50,000 rupees per month, and that was a provision introduced in last year's budget, then your tenant has to deduct some tax at source. So are those the details that you need to file in? What are these additional disclosures with respect to house property?
Yeah, so those details are also if a person has let out his property, and so the TDS which he has to claim as a credit for against the taxes which is required to pay needs to be disclosed. In addition to that, if a person himself is paying rent to a landlord, and if that rent is exceeding 50,000, then he is also required to deduct TDS. And that disclosure requirement is also incorporated in this form as well.
Okay.
So it is apart from he is renting out and the TDS thereon.
Sure.
Also, when he is paying rent and he is deducting TDS, that also required to be disclosed in this return of income now.
Okay, fair enough. So that makes it more clear now. On that note, we need to take a very quick break. But we've only gotten started. What happens if you have capital gains? Then which is the form that you need to file? What happens if you're not a salaried employee, if you are a professional and you're working on contract? Then which is the ITR form for you? The conversation continues. Welcome back. You're watching Money, 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 and this time around we are helping you file your income tax return if you've not done so till now, breaking down all of the new forms and helping you pick the right one for starters. That's the first step. So, gentlemen, let's, take it forward now to ITR 2 and 3. And I'll start with the basic question. I mean, for instance, if you have, let's say, capital gains income in the year, then how do you decide whether ITR 2 is right for you or ITR 3? Because, you can file both. Both of these forms allow you to declare and disclose capital gains income. Akhil, you want to take that up?
Yes, this year, I think ITR 3 is specifically for the people, who are into business profession and so the people who have income from business and profession, they can go for ITR 3, but for the people like non-resident, not ordinary resident who has a salary income and income from more than one house property, they can stick to ITR 2, and both ITR 2 and ITR 3 has a schedule to furnish the capital gain details.
Okay, so let me just take a couple of steps back and rewind that. ITR 2, if we just discuss that, Mr. Shah, that is applicable to people who have income above 50 lakh rupees. ITR 1 excluded this category. So now ITR 2, if you have income above 50 lakhs, it can also be used by non-residents, right?
It can be used by non-residents, that's correct.
Okay, but people who are not in some sort of a profession, then people who are not conducting business, there's no business income for the ITR 2 category.
Then in that situation, as indicated earlier, it is ITR 3 which needs to be used.
If there is business
income. If there is a business income. So for other than business income, ITR 2 is more appropriate because you don't have to give many details about business.
Fair enough. So now ITR 2, any critical changes now that we know whom it is useful for? Sure. The critical changes in ITR 2?
So changes which are there is that we are required to disclose lots of information about exempt income in case of salary, as we have indicated in ITR 1. The same gets repeated over here as well.
Sure.
Apart from that, if there are any capital gains which are there, then in that respect, there are several exemptions one can claim. So if one person has sold house property and acquiring another house property, there is an exemption available. Or if he invests in some bonds, then again, he can get those exemptions. So details in respect of those exemptions, to what extent it is eligible, because as I had indicated earlier, they want to automize everything, all the calculations, because of which they are requesting for all these details. So now earlier those details are not required to submit it, but now we are required to submit details in the return form itself.
And there's no cap on the number of properties. You can have more than one house property and you can still opt for ITR 2.
Absolutely. You can have n number of property and you can incorporate all the properties, whether in India, outside India, it really doesn't matter. Okay, so that makes it fairly clear. Akhil, I think you also have a point to add on ITR 2?
Yeah, so most important, which is one of the biggest relief government has given to, foreign nationals and specifically non-resident category people, that this year, if they have any refund, they can furnish their foreign bank account details. Which I think is a welcome step, because earlier the people who left India and they're still required to file return and they have some refunds and they don't have Indian bank accounts, so they were struggling to get the refunds issued. But this year government has come out with this, so this is one of the point I want to highlight, which is a relief and a welcome step from the government.
All right, gentlemen, now let's talk about ITR 3, because this is what comes into play in case you have business income or you have income arising out of profession if you're working on. Now, gentlemen, this is the big bulky form, right? This, I think, runs into over 30 pages and there are lots of disclosures. So, Mr. Shah, why don't you go first? ITR 3, who should opt for it? Because this is the complicated form now.
So, the person who has a business income should go for ITR 3. Also, the person who is having a business income but going on a presumptive taxation cannot use ITR 3.
Okay. Presumptive taxation, just to simplify this, is sort of an agreement between the taxpayer and the government that there will be a sort of a flat rate of tax on a flat sort of revenue threshold. How does this presumptive taxation work?
So you are right. The presumptive taxation will work like this, that if your gross receipt is X, then percentage of X is considered as an income, and on that you have to pay the tax.
Okay. So it's declared upfront.
Upfront, yes. And you don't have to declare about what expenses you have incurred and how much you have incurred and all that. But that presumptive taxation applies only in case your gross receipt is below 50 lakhs.
Okay, okay. So we'll deal with this separately, but just
Yeah.
to sort of make a note of it, presumptive income scheme is a separate scheme as long as your income is below 50 lakhs. Then you can opt for a separate ITR, that's ITR 4. We'll get to that in just a moment. But right now, sticking to ITR 3. So, Akhil, come in on this. ITR 3, it's a fairly complex form. I think you have to sort of create an entire balance sheet, full profit and loss account. So this should ideally be opted by what category or what class of taxpayers?
No, as Mr. Shah clarified that, for the people having business, income from business and profession, and that to more than 50 lakh rupees, they have no other option but to go for ITR 3. The professions having gross receipt less than 50 lakhs can even go for ITR 4 on a presumptive taxation. But here they have no other option but to go for ITR 3. And this year the ITR 3 has come out with major changes. Changes like, asking for GST detail, which is CGST, IGST, and state government GST. So these kind of things are there, and and there are changes in schedule business profession on any effect of the profit because of deviation as per the ICDS. And there are, like as you said, that it's a long form, so it's again not an easy task for the taxpayers who are using ITR 3 to complete the form without the help of any professional person.
Okay, so obviously there are a fair amount of disclosures required. Sir, do you just want to add it on what Akhil said about these ICDS disclosure requirements? What are these new disclosures this year?
So these are not new disclosure requirements. Earlier it was there, but it has been extensively covered because there are new accounting standard which has been introduced by the income tax authorities, and now disclosure in respect of that is also required to be made in the ITR forms as well.
Okay.
So what it means is that how have you disclosed your income, what kind of accounting treatment you have given to disclose this income, and whether it is as per the accounting standard notified by the income tax authority or not, that certification needs to be done.
Okay, so that's ITR 3 for you, the big form that needs to be followed if your income exceeds 50 lakhs and this income is from business or profession. We'll take a quick break. The conversation continues. We cover ITR 4 and of course then the tips and tricks to make sure that your ITR return is filed properly and in time. Welcome back. You're watching Money, 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 and this week we are helping you file your taxes in time before the 31st of July deadline. Now, we've covered the first 3 forms. Let's quickly run through ITR 4 as well. Akhil, just your quick explainer on this. ITR 4, as Mr. Shah earlier pointed out, this takes care of taxpayers who want to opt for this presumptive taxation scheme. How does it work? Any key changes this year in ITR 4?
Yeah, so as Mr. Shah also explained previously that, this is for the people who have income from business or profession with a turnover or a gross receipt of less than, 50 lakh rupees. And this gives an advantage or this kind of arrangement between a taxpayer and the government, that the taxpayer is not required to book the actual expenses and, can consider the benefit of 50% of the receipts or turnover as an income and offer that income to the tax. The key changes which are there, again, information regarding GST, turnover, gross receipts reported and the GST return to be reported, and these kind of changes are there. And other changes, as we have already discussed, that if the person has some house property income, so details about that needs to be there. So 194 IB TDS on the rent paid for more than 50,000 needs to be reported. So that's about ITR 4, and it's a bit convenient form for the taxpayers.
Okay, so if you're a professional, your income is less than 50 lakh rupees, and you might want to look at this particular tax form. Well, on that note, gentlemen, I want to ask you about the basics, the do's and the don'ts, as people are right now racing against the deadline to get their tax filing underway. Mr. Shah, any tips or tricks that you would like to share with our viewers?
So I think any exemption or any deductions which we claim, the scrutiny or assessment takes place after a couple of years, and therefore the documentation we should maintain it today rather than waiting for people tax authority to ask for it. Second thing is that ITR form 3, the deadline can get pushed to 30th September if your accounts are required to be audited if your gross professional income is above 50 lakhs and your gross turnover is above 1 crore in that situation.
Okay.
Or if a person is receiving share remuneration from partnership firm, and partnership firm is required to get its financials audited.
Okay.
In that situation, again it get extended to 30th September.
Okay.
So they need not worry about 31st July, but they should just wait, and they can file it by 30th September.
Okay, fair enough. But for the rest, for whom July 31st is indeed a deadline, salary taxpayers like myself for sure, Akhil, any advice?
Yeah, so I think this year most important is the deadline. You know, the due date is 31st of July. If you are not able to meet that due date, then you have to file your return with a penalty of 5,000 rupees. If you're filing your return after 31st July but before 31st of December. However, if you miss this 31st December deadline, which is the second deadline, then you have to file your return with a penalty of 10,000 rupees. And you know, the government has done away with the concept of belated return filed after 31st of March. So due dates are very important for the people.
Well, gentlemen, thank you very much for being with us and hand-holding us through the return filing process. Hopefully that makes things simple for all of our viewers. Thanks very much for joining in. That's all the time that we have on this episode of Money, Money, Money. We'll see you again next week.